50% right here. So what I'm gonna do is I'm gonna draw a line to tell us where that 50% mark is, and then we can see what is going on. I believe it's right there. I'm gonna make this blue, and I'm gonna allow it to be a little pieced out. So bear with me here, and let me show you something. All right, so we can get rid of this fib. I just wanted to get to the 50% mark, right? And I'm gonna make this a little bit bigger so we can all see, even if I scoot it up a little bit because it's in the way. All right, how do we make this a little bit brighter? Let's make this a little bit brighter. There we go, boom. Did I add that color? I like that. All right, so this is the 50% point of the order block range. Now, what I was explaining in one of my previous videos is that it's very important to recognize when price is respecting the halfway point of a specific order block range or fair value gap range, and then begins to trade back in the general direction. That should give you confidence that your trade is in the right area, that you're taking the right trade, and that you can take that trade confidently, right? So pay attention, because price trades right just below the 50% mark of the order block range. We already were looking for a discount. We already were looking for price to pick an area where it wanted to turn around. We already passed the higher time frame 50% mark of that entire range that we were looking at, right? Now we're here looking at the range of the order block, and that order block range on this 2-hour chart says that this is the midpoint, and price just barely trades past it, and then comes back and tries to touch it again, and then begins trading the other way. And as you see, price then, after it touches that 50% area, tabulated by that right there that I've shown you, boom, we get off to the races. Now, when you see that type of impulse, that is what we're looking for, because then what can we find off of this type of impulse? Price trades way away from this zone that it was at. And so that allows us to then begin to look at areas where price might come back in, and let's look at that 50% rule again. Now, what do we have here? We have a breaker, low, high, lower low. This area would be a breaker, so we can get that tabulated on our chart. And let's get another one for the bottom of it. Boom. Now, where is this right here? A fair value gap. Boom. So, right off the bat, we can just measure 50% of this fair value gap. And now y'all starting to see what I'm talking about, okay? Where's 50% of this fair value gap? This is 50%. Give us the dotted line, get rid of the range, and wow. We traded with impulse. Let's just go over the normal model, right? You got bullish order block, right? First of all, let's go over everything, I guess. You had the order block area already, right? From this, and let's get rid of this. Actually, we can keep the discount, but let's just go back. We have the order block area here. Order block high, order block low, order block midpoint. Price respects the midpoint. Now, price is starting to trade away viciously with impulse from the midpoint. We have a new order block, 2 down closed candles. Price trades away from them, forms a fair value gap. Price doesn't even trade back into them, leaves this fair value gap open. There's also one here, but we're looking at this one. And now truly trades way away from this range. Finishes the breaker, trades away from the breaker, correct? If we were to look in here in the lower time frames, you could see price trading into the breaker and then moving away. So you could use that as a trade as well. This is an order block here. Price trades eventually had traded back into here and then went up, right? But now this zone here, fair value gap on the 2-hour time frame, right? And I'm not saying you have to use the 2-hour, okay? It's not really about the 2-hour though. It's any time frame, especially the lower time frames, as you're trying to frame trades intraday within the same day, correct? So price eventually trades back into this fair value gap range, but what does it do? Essentially rejects the 50% area of the fair value gap. That is key to us, right? That's in addition to the order block fair value gap setup that I like to talk about. But when price begins to respect the 50% midpoint, the midpoint we could call it, of these fair value gaps, and then trades back in the direction of the higher time frame bias, that is a key thing, because then we can start looking again for trades in the direction of the higher time frame bias. Okay, so price traded down here and then trades away with impulse. You would have been able to find trades within there looking at that same thing. This would have been the order block. Now I'm sure we get on the lower time frame, we could see it clear. Anyways, you can't see it, but on the lower time frames, you would be able to frame a trade within this area, knowing that price touched the 50% area of the fair value gap, and now we're back on the higher time frame. And guess what? It never breaches that 50%. On, right? And you can look in those same types of ways, you know, when price is trading away from a certain area, to see if price is going to respect the 50% area, or even just fill it in. Even if it were to come down here and almost fill it in, but just not fill it in all the way, or not trade past the fair value gap, we would still be good as long as price then begins to show us, you know, price movement towards the other way.